Let's bring in a guest who studies market performance around elections. Joining us right now is Ed Clissold. He is Ned Davis Research Group Chief U.S. Strategist. And Ed, you took a look at these things. And typically, right after an election, if the Republican incumbent wins, the markets tend to do better. But that's not necessarily the case for the next year. What are you kind of looking at when you look historically at what happens?
Yeah, so we look back to 1900 at all election cycles, and we divide the market up into whether the incumbent won or lost, in particular when the Republican incumbent won or lost. And the market does tend to rally either way after the election. It's a relief rally, but the rally is much stronger when you have the incumbent winning, especially the incumbent Republican winning. But when you go into the next year, it tends to reverse. Actually, the market does better when the incumbent Republican has lost. And so I think the message from this is a lot of the political angst is really more about sentiment and not about fundamentals. When you get into the next year, other things seem to matter more than all the concern over who's going to be in the White House.
Meaning that people worry there are going to be big changes to come, and as often the case in Washington, less gets done, historically at least?
Exactly. Yeah. So for example, if Biden were to win, there probably will be some angst over higher taxes, increased regulations. But in reality, those things are very hard to get through, even if the Democrats take the Senate, too. It may be hard to get some of those through. And they may not even be the top of Biden's agenda in 2021. It may be something he pushes for later on in a few years. So it doesn't mean these things are going to happen. And so, the market will be concerned about it. But in reality, a lot of the time, those things don't actually come to fruition.
I mean, you were looking all the way back to 1900. Is there an argument to be made that maybe that's changed a little bit in recent history, maybe the last 12 years, the last 16 years, the last 20 years?
Well, first of all, an important caveat. We're not talking about a ton of cases. And so you don't want to draw too many strong conclusions. This is one piece to the puzzle when you talk about investing. But actually, the data's been pretty consistent. If you look at the 6 times the incumbent Republican Party has lost, the market was actually down from September 15th to Election Day 6 out of 6 times. So this has been very consistent. Where it doesn't matter if you go back to 1900, started in 1980. These trends have been fairly consistent.
You said that it didn't matter even when the Democrats took the Senate at the same time. And I think that's the big question people have been watching. If you're going to see big swings, it's going to be because there's a blue wave that takes over all three of those branches. But do you have any historical things that look back at even when the opposition party takes the Senate too? It doesn't necessarily matter.
So we've looked at various combinations. So for example, a Democratic president, Democratic Congress, Democratic president, Republican Congress, Democratic president, split Congress. And actually, under Democrats in the White House, the market's done a little bit better when there has been some sort of check on their power. That is either split Congress or Republican Congress. Although the market has risen under Democrat president, Democrat Congress as well, just not as much. So there is something to be said for some sort of check on power, especially if there's a Democrat in the White House.
Shepard Smith here. Thanks for watching CNBC on YouTube.